Last year a little uneasy. This year we have some numbers out there. Do we look at MCO? Do we wait and go with ECO later on?
And the important thing with the MCO to remember is you're only changing the coverage level that you have elected for the price.
Hey everyone, I'm Brooks with AgriSompo. Thanks for tuning in to another edition of Straight to the Point. This month, I'm joined with Jason from AgriSompo's national sales team, and we're going to spend just a few minutes talking about margin coverage option. Now, last year, MCO, as we call it, was new to the playing field, and Jason played an integral role in rolling this out for AgriSompo. Jason, first of all, welcome to Straight to the Point, and give us a little background on what you did with MCO last year.
So last year during the MCO, we worked with the RMA to make sure that we got the rules and requirements correct. And then what we tried to do was perform kind of a look back on the last couple of years on how the policy performed compared to ECO. Because of the limitation with the inability to elect MCO and ECO at the same point in time, we wanted to make sure that we were providing information to help guide the decisions to protect the risk for the farmers.
It's a relatively big rollout, and there were some unknowns last year. Like Jason said, do we want to go ECO? Do we want to go MCO? Some people took a leap of faith after they really looked at the details. What we've got going for us this year is we're more than in theory. We've got that 1 year track record, and we've already got some information. We know where MCO closed in regards to price early on, the projected price for the commodities. But more importantly, and this is really what kind of erased some of my reluctance, is we've got those expense, not just the projected prices, but the final expense prices that go into the calculation. And I'm going to tell you my emotions, Jason, through this whole thing, where last year I thought we did a really good job of talking about pros and cons of MCO. And then there was some doubt that crept in about December, January. Did we provide people with every bit of information we needed? Was this really the right tool? And lo and behold, right before the averaging period, which is in April, each year on the expense side, we had a conflict in the Middle East. It caused these inputs to really rise. Suddenly MCO was a player. And I think there's something to remember here, a lesson in it, that as much as we think we know, we don't. It's the unknowns that get us every time. And of course, that's why we're in the business, right, Jason?
Yeah. I mean, I think you're absolutely right. From my perspective, when we looked last year at the training, and Brooks and I were kind of sweating in January and February because we talked a lot about MCO and we thought it was going to be a good play in the market because it purchased a higher or earlier discovery price for the insured commodities. And typically that August time period is better for the insured commodities, but the inputs had gone down and were sitting a bit lower in January and February.
So, Jason, a great illustration of how diesel works. Now, we're looking at some other expenses out there. What were the other expenses that we looked at back in the fall? You mentioned August 15th through September 14th. What were the other ones that MCO takes into consideration?
The other inputs are DAP, urea, potash, and if you're irrigated, you also have natural gas.
The really nice thing, and what we fall back on, and what we hope agents rely upon too, is the AgriSompo MCO calculator or worksheet. I know you've done a lot of work on this. No matter what county you're in or matter what state you're in, you can pretty much hit that easy button. You've got all the yields in there. You mentioned expected annual yield. You've got the beginning numbers when it comes to price and when it comes to those input prices. And then you've got the margin impact. Can you show us an example of how simple AgriSompo's MCO worksheet can make this for an agent and a farmer to understand?
So we pick our state, county, crop type practice. These drop-down filters will filter off of the selections you made previously. So kind of start left to right and then left to right. This box needs to be filled out just for the SEO stuff. So as you're filling this form out, you just want to play with kind of this number and this number. These are the two things that will impact how these policies pay out. Based on our conflict here, 185 final yield pays more for MCO versus ECO because of all the underlying inputs that went up. So since those inputs went up, it does increase the likelihood of a greater payout for MCO, provided that the final yield lands kind of in the middle. There are times, so if I drop this final county yield, if it's a little too early to tell, right? But if the final county yield is 150, you will see the ECO will pay more because the price was a little bit higher on ECO. If the price is higher, it won't matter at all. So we got to continue to flip through this, make sure we get this right. We want to do NFAC non-irrigated. And if we change this to 55, doesn't really matter for that year, but let's say 50 here. And obviously it's I think it's 1107 for the soybean price. Then we have, right now we're trading at 1150 for the corn. Keeping in mind, when you switch crops, make sure to change your APH. This number will copy down just to make it kind of one place you type. Obviously, a 200 APH is a corn APH and not a soybean APH. So if we change this to 55, this will then recalculate all these at 55 and it'll change the indemnity. But because the soybean price is higher, if this ends up being higher than 1107, MCO and ECO will effectively pay the same kind of, minus the change in the inputs, right? Your liability for the gap in between is the same for the 9% range because of that, but the likelihood to pay is greater for the MCO because of what the conflict has done to our underlying inputs. So as you guys are looking at performance of MCO for 2026, as you look to your sales closings coming up here for September 30th for MCO for crop year 2027, definitely conversations around the impacts of what the input price rise does and what it does to the likelihood of a payout is super useful. So we have this tool available. You can contact your AgriSompo business development rep and they can get you a copy of this.
So, Jason, we've got hindsight as our friend right now. Last year, a little uneasy. This year, we have some numbers out there. As we look at the fall, we've got the same considerations. Do we look at MCO? Do we wait and go with ECO later on during the typical sales season? While we're not quite there yet, we're starting to get some hindsight to be able to tell how effective this contract will be. We certainly know the expense side of things favors, protection from rising prices. We're not sure where that final price would be. It's probably worth mentioning. MCO prices came in where, Jason, back in the fall?
The spring sales closings had a little bit higher price on corn. The corn price for MCO last year was $4.56, and we ended at $4.62 for corn. And on the soybean side, we had a 1073 MCO price and a 1109 spring price for the soybeans.
And now we'll wait until this fall. We'll wait until that October, that traditional period. So the MCO, just to be clear, kind of replaces what we would call our traditional projected price, which for most of the country is during the month of February. We established that price nearly 3 or 4 months earlier, but the comparison or the harvest price is the same with MPCI, with ECO, no matter what endorsement we choose. It's going to be that fall average. Is that correct, Jason?
Yeah, that's correct. And the important thing with the MCO to remember is you're only changing the coverage level that you have elected for the price. So looking at 2027 sales, now that we have SCO going to 90%, your MCO and ECO coverage is only going to be a 5% range. So you're picking and potentially electing a different price for that 5% range based on that August to September discovery period.
I think you've given us a lot of ideas, Jason, of what considerations we need to make going into this fall. I know we're a little bit ahead of the game as we roll this out in July, but I think there's going to be a lot of conversations directed towards MCO. We certainly hope that it's at least a consideration as you go into this fall sales season.
Yeah, and I would say the biggest consideration for this policy, which you got to look for, is are you concerned about rising inputs in April of 2027? If that answer is yes, it's a good policy to take a look at. If you're concerned about the price of the insured commodity falling between September and February, you also want to take a look at it. And those are the two big differences between these two policies when you're deciding between MCO and ECO is my insured commodity price going to fall between now and February? And are my inputs going to rise between now and April?
Sometimes when a new product comes along, there's a degree of reluctance of whether to accept that or not. Our idea here is to make it really simple. We've got two options. If you're looking for that 95% level coverage, you can look at MCO, you can look at ECO. One example that AgriSompo has really worked hard to supply is exactly what Jason modeled. It's the MCO worksheet. It tries to take somewhat of a complex formula and boil it down if you're looking for that coverage. As we look back on the year, we've got some hindsight. We know where those expenses came out, more likely to see a claim based on that price movement. Our ask today is really simple. Reach out to one of your business development representatives with AgriSompo. Let them showcase what AgriSompo knows and what they need to know about margin coverage option.